Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing so complex, it's like trying to understand why your cat suddenly hates cucumbers. We're looking at Bunker Hill Mining Corp's latest report, and let me tell you, this company's financial situation is giving roller coaster a whole new meaning. Buckle up. Right off the bat, this is a Form 10K, their annual report, so it's a big one covering the entire year of 2024. This report isn't just about profits, it's a survival guide. They're talking about the year that ended December 31, 2024. So what's the main story? Basically, Bunker Hill is trying to revive a historic mine, but it's proving to be a tougher climb than they thought. This is not a well-known company as indicated by the report checking no when asked about it. They're also a smaller reporting company trying to make their way in a tough industry. First, a very important thing. There's a huge section dedicated to forward-looking statements, which basically means they're making guesses about the future. They use words like X, plans, believes, which in SEC filing language translates to, we hope this works out, but no promises. So keep that in mind as we move forward. Nothing is set in stone. Scrollability to secure capital in order to avoid a reorganization or other liquidation call. One of their major concerns is whether they can even get enough money to stay afloat. This is a recurring theme which we'll see as we go. Their public float, which is the value of shares available to trade, was around $39.6 million as of June last year. Small change in the mining game. Jumping ahead, let's look at the important stuff, the financials. Here's the elephant in the room. They acknowledge substantial doubt about their ability to continue as a going concern. That's about as clear a warning as you can get in the corporate world. As of the end of 2024, they're sitting on an accumulated deficit that exceeds 110 million deficit. That exceeds 110 million deficit. That exceeds 110 million deficit. That exceeds 110 million to deficit. But things just got pricier. The estimated total cost to restart the Bunker Hill mine has jumped to $103 million. A big increase from the previous estimates. Delays haven't helped either, pushing the potential restart further into the future. A significant risk factor is this company has no operating history. Everything is based on studies from a past producing mine. There's also a big section on environmental regulations and the associated costs. They depend on the Idaho Department of Environmental Quality to treat wastewater, and those cost. They're as predictable as the weather, fluctuating a lot based on rainfall and metal concentrations. The price of commodities like silver, lead, and zinc are highly volatile and can impact their ability to operate. But before we get into even more problems, let's check the financials. Let's look at the highlights from the balance sheet. Looking at the asset side, cash took a major hit, down from $20.1 million in 2023 to just $3.7 million by the end of 24. That's a massive drop. The Bunker Hill mine asset itself increased in value to $18, up a few million from last year, possibly from development activity. On the liability side, their debts are piling up, including a $31.8 million silver loan. Total current liabilities shot up from about $7.5 million to $30 million. That means they owe a lot more very soon. And this all leads to a shareholder's deficiency of over $52 million. Basically, they owe a lot more than they own. Next, the consolidated statements of operations. Operating expenses also increased to almost $16 million. Their net loss more than doubled to $25 million. To make matters more interesting, the fair value of their silver loan took a hit due to updated key assumptions such as commodity prices, which is not good news. Let's dig into the cash flow statement. They spent more than $10 million in operating activities, and they spent more than $40 million in investing activities. Were it not for $32.7 million in financing activities, this would have been an extremely bloody report. They are attempting to fix it through share issuance, diluting current investors. They brought in cybersecurity experts. The good news is that the experts didn't find any risks, so no Russian hackers. Alright, what do we take away from this long report of it? While they're making progress in redeveloping the mine, the financials paint a concerning picture. Their debts are way up, their cash is way down, and they're relying heavily on new loans and selling stock to stay afloat. The dependence on volatile commodity prices doesn't help either, and any further delays or cost increases could be devastating. The silver loan helps, but with major projects like this, it might not be enough. They continue to face challenges in securing financings with Exim and debt restructuring. So what is our take? Bunker Hill is in a really tough spot. They have a mountain to climb and their gear is looking pretty worn. The upcoming debt restructure and equity financing are crucial for their survival. If they can pull those off, they might have a chance to turn things around. But if those efforts fail, it's hard to see a positive future for this company. Big risks with this one, folks, so stay informed and do your own research before investing. And that's it for today's Corporate Decoder. If you found this helpful or terrifying, give us a like, drop a comment, and subscribe for more financial deep dives. Until next time, stay safe out there.